Hello and welcome to FinextraTV. I'm Hannah Wallace, and joining me to discuss the US payments market and instant payments adoption is Clive Redmond, Senior Vice President, Real-Time Payments International Market Product at Mastercard, and Pat Antonacci, Chief Product Officer at the Clearinghouse. Hello to the both of you. Thank you for joining us.
Thanks for having us.
Thank you.
It's great to have you in the studio discussing the changing US payments market and the adoption of instant payments globally. This is a fascinating topic and indeed a pressing one. Where I think we should begin our discussion is reflecting on how the US market differs from those globally and in the UK. Pat, we'll begin with you.
Sure. I think one big component in the US versus other places is the maturity of the market. In the US, we have ACH, we have wire, we have checks still. You're processing cash, you have same day ACH. So the maturity that's been created in the ability to provide choices to customers based on the type of business that they need to operate are vast, and you have the security, the reliability, the efficiency that already exists. Another piece that's a main component is the way that the US market moves. The drivers are more directly linked to market demand and innovation around market demand rather than they are around regulatory change. So that forces kind of a slower adoption to ubiquity in many cases, but it has a lot of staying power in that process. And we're seeing that with RTP. RTP is today 8 years old since the Clearinghouse put RTP in partnership with Mastercard on the map. We're seeing exponential adoption in that space. We're running at around 1.3 million transactions a day with peaks in October of 1.8 million. We have a 74% reach in reaching DDAs in that space, and we're operating at around 320,000 businesses and 7.5 million consumers on a monthly basis that are using the real-time payment rail. So great adoption in a market that's really different from a forcing adoption than we see in other places around the world.
Mm-hmm. Well, thank you for bringing us up to date with the US market. And Clive, what about the UK and globally?
We support 12 markets globally, one of which is supporting TCH, and we do see some differences in those markets. So one example would be in the UK, where they've had faster payments in the ground since 2008, where we support Thailand, the Philippines, and as well as Peru. Another area that is growing rapidly is the use of wallets. So wallet adoption in these markets is really growing. It's that sort of digital first economy, and it's really enabling a lot of growth in these particular markets and allowing financial inclusion, but also the wallet penetration in terms of Gen Z. So 91% of Gen Z are using a wallet is their preferred choice in terms of how they want to shop. So so it's there's a number of those different sort of global scenarios really do resonate with TCH's journey. And in addition, so in the UK, across the account-to-account ecosystem, which contains faster payments, backs and check, we've seen 13 billion transactions processed in 2024, so continued growth there. But also it doesn't stop there. So a recent EY report has identified 9 billion annual GDP that can be added to the UK economy, driven through continued innovation in regulation and technology.
You've given a great overview of the changing US market, but also touched on some of the areas of opportunity as well. So building on that, are there any specific impacts that can be attributed to the real-time payment network as well as instant payments? Pat?
Yeah, I think what we've discovered is the demand for instant, and that's a demand in everything that consumers do today, from delivery of their packages to their day-to-day lives, and that's changing with payments. Payments used to be a back office operation, something that happened behind the scenes, and now there's really opportunities to bring payments to the forefront and change the sexiness of payments as it was in the past. From a real-time payments perspective, in the US, we're seeing on the Clearinghouse's network that 24/7 is a major component, right? So 46% of the activity that we're seeing is outside of normal business hours. So people are seeing the demand for that real-time payment, but some of the same use cases as we're seeing in other markets, account to account. So me-to-me type transactions moving between my accounts or moving to my brokerage account so I can immediately trade on that brokerage account. And that's instant and immediate to be able to do that. We're seeing from a wallets perspective, the funding and drawdowns of wallets. And we're seeing from a real-time perspective, as soon as someone does that first drawdown of their wallet, they only do that instant in the future. They're really seeing that value of that instant movement. But you have as well the gig economy to make sure people are being paid when they're done with their Uber drive, in the freight space to make sure that they can get paid instantly instead of 30 to 60 days later. We're seeing it from the perspective of mortgage payments or initial house purchases, car loans, all those different components that are more precision payments rather than faster payments. I don't want money leaving my account faster, but I want to make that precision payment that I know is done and at the time and is available to me 24/7. And that's really driven what we're seeing in the real-time payment space.
Some interesting use cases there. Clive, would you like to add to that?
Yeah, so I think it sort of resonates a lot as well. So you've got 60 faster payment schemes now in operation. Real-time payments is going to account for, circa 30% of all global electronic payments next year. And that's driven by the evolution of market adoption. So use cases that we're seeing, request to pay is one of those big use cases. And as Pat alluded to, so it really does start to give not just at the consumer end, but also for businesses. So, one of the use cases that we see now is prevalent is really around the ability to manage liquidity in a much smarter way. So almost payment on demand. So which then sort of removes a lot of the operational inefficiencies associated with that. But also other use cases that we're starting to see as well, especially in the government to person space, particularly around disbursements. So it could be aid disbursements, which we're also seeing, in particular in Thailand, they've used that quite extensively recently. So there's so many different use cases now, and I think now with the consistency and also with now the adoption, people are now familiar with it. So it's a little less scary, and it's now really, people have started to feel really comfortable with it. So more and more use cases will definitely come.
And those use cases really highlight the progress and innovation that's been made in this space. So coming back to the US then, taking into account the growth of instant payment capabilities, what type of challenges might the clearinghouse but other financial institutions face as a result?
Yeah, I think some of the challenges with adoption is some of the things that Clive talked about in the fact of ubiquity and getting that momentum, right? So today, most systems are running at batch. So moving to a true 24/7 real-time type of a model is a lift for many organizations. We're meeting some of those challenges with the technology providers that we partner with. We have 20 plus of them that make that onboarding process a little bit easier. So there's some things that are misconceptions as well, that drive challenges, but they're more around misconceptions. I think another one is around faster payments equals faster fraud. We're not seeing that. So really understanding what those different components look like today and making sure that we're prepared as we get more and more on requests for payments and other flows, that fraud is maintained and minimized as much as possible. I think there's other challenges in ubiquity, but as I said, it's how you define ubiquity. Can I get to the players? Can I manage this in a 24/7 perspective? Do I have the business case and the use case to move? And I think some misnomers are there's no demand for it. My clients aren't asking for it, but the statistics show that there is demand, and it may be Gen Z, it may be just a move in the market, but there's definitely the demand there. So removing those misnomers and really education, I think is a challenge that we're working to overcome in defining that ubiquity and how you get there or perceived ubiquity in the space.
Clive, what's your take?
Completely agree, and a lot of the markets have seen that. Some markets have taken the leap. They've gone, they haven't had the legacy hurdles to deal with. They've actually gone straight to digital first, for want of a better term. But also what we're seeing in terms of challenges is things around interoperability. So as new, particularly around the future-facing technologies and payment types. So, consumers really want to be able, it doesn't really matter how they're paying, by an ACH, by an RTP, by a card, by wire. It needs to be a seamless experience moving forward. And then one of the other challenges, as we've seen it, is the rise of fraud, but fraud in terms of linked to specific use cases. So When you're talking account to account, so a business-driven payment or an initiated payment, online, you've got the various different fraud checks that happen in that space. But when you've got you're in store or online, those consumer-facing use cases, so instant settlement really does require immediate risk mitigation. And how do you do that? Well, it's all about the data. So it's ensuring that you've got the data, the access to the data, to enable to make the right informed decisions to ensure that consumers feel safe and secure.
So you've highlighted the challenges. So my next question is, what's the response? What solutions and opportunities are available then to meet those challenges head on?
So from a Mastercard perspective, we pride ourselves on working collaboratively with our customers, such as TCH and our other markets. So working together to look at the market, to look at the challenges, to look at the opportunities, and then look to co-create those solutions. So how can we make it easier for businesses, for merchants, for consumers to access the services, the rails themselves? How can we simplify the barriers to entry, to Pat's point? So the misconception of onboarding is tough and difficult, but actually this is all about, so we've got solutions there that we've been working on. And then, so if you think about the infrastructure and the network and the access, they're more of the traditional components of the ecosystem. But also, as Mastercard, what we've been working on over a number of years now is listening to customers, listening to the global feedback, looking at the assets that we've got as the broader Mastercard, and looking at how we can then develop and supply value-added services that are rail agnostic. So they don't need to be, it's not a Mastercard rail or us working with TCH for this rail, but actually a bunch of services there that can really help to drive value. So some of those things that we have available, so consumer fraud risk, trace and alert, disputes in the real-time payment space, bringing all of those things together now under a new account-to-account protect solution, which will then help to drive further adoption by providing consumers and merchants with more protection and more value.
Some sound advice to lead off from there. Pat, what would you add?
Well, I think from a clearinghouse perspective and what we've seen from RTP, the opportunities are to get on board, right? And that would be my recommendation is remove the misnomers. As I said, we're at 74% reach today. We're running 98% of the volume for real-time payments in the US market. So, a real concentration and opportunity for people to get on board in the process and removing those barriers of adoption, of ease of adoption of the technology, bringing more and more use cases and more business cases that individual FIs and credit unions can drive where there's opportunity for business for them. So I would say get on board. The opportunity is to be part of the revolution and continue to make payments sexy again, right?
Absolutely, absolutely.
A very positive note to end on and good call to action there. Pat, Clive, thank you so much for sharing your insights. I look forward to reflecting on those further down the line. But for now, we'll leave it there. Thank you.
Thank you.
Thank you.